All right, folks, we'll skip the intro here because we're a little late, so we'll begin right away. If you can hear me fine and you see the picture fine, let's just go right away. Okay, are we having a recovery? Is that it? We're done with the rotation and all of that, or are we just doing something different here? Let's look at the flows. Most important thing you have to look at today is this. Uh, if you looked at the open interest yesterday, you would have seen a lot of red here in the open OI change, meaning a lot of calls before the CPI, they closed and they got out as if the market kind of was pricing it in, and they closed their calls and got in. Today, what we see here, the open AI change, that's what they bought yesterday. So there was buying of calls yesterday on the drop. On the put side, there was a close. So they closed here at the 560, 559. We're still buying at the 553 level, but the feedback that the market maker woke up to is there was buying of calls, there was abandoning of some of the puts here. So they went with that feedback to exercise a little bit of pain on the put options with the expiration date today. Now, we have to also look at the indicators. The Dixie continues to go down, but I think that we've reached sort of a double bottom here. We'll begin to find some footing in the dollar. And if that continues to find a footing and continues to move higher, it will also stall the rebound that we got today. So watch this level here, how we're going to hold in the US dollar and this support right here. It held here before, gave us a rebound. Now it's trying to hold on to it again. So we'll see how that's going to hold throughout the day. When it comes to the bond market, yields also, I mean, it's doing the same movement as the US dollar, which not something unusual, but when it comes to yields, I think that if we look at the weekly chart, we need to see the support that we have identified yesterday in the videos. You can see that we have the trend line here getting really close to reach the same points of rebounds that we got before. So this one may have a little bit more to go down, but the influence for today's tape is not coming from the bond market or the dollar. The influence is coming from this guy right here, the VIX. As they close some of the puts, at least the ones that were bought yesterday, and we see the VIX dropping down, reaching pretty much the lows here Thursday. The tape is taking the feedback, algorithmic feedback that, okay, I should buy. Now, if we look at let's look at 30 minutes. We're getting a little oversold here in the VIX, where we're going to see demand and hedging again based on the influence that we got from yesterday's tape, that there was a rotation. We could see the big caps also getting softer. I mean, not all of them. You see Apple rebounding today, but you see Meta down, you see Google flattish, Amazon flattish, you got Microsoft down. So that's going to be in the top of the head of a lot of investors, that we could see still this exodus out of the big caps and rotations to otherwise the smaller caps in the market, and that's going to cause some demand for hedging to show up later in the day as we close. So we'll keep that in mind. But SPY right now, the threat, of course, is, if we look at 10 minutes chart, the threat would be that this formation all in all would be, here it is, a cup and handle. So we want to see failure at this line. If you begin to trade above that line, then you're going to threaten reaching the top of the formation here. Of course, then we can talk about double top and all of that. But in a candlestick, somebody said today in Discord, I was looking at the chat, somebody said a stick sandwich pattern. Too early to say about that. It's not really a stick sandwich, because the stick sandwich will be, the middle candle would be shorter than both. This is a bearish engulfing candle that we got yesterday. Today, it's not a bullish engulfing candle, but it's within the body of the bearish engulfing candle. So that's all what it is here. It's not really giving us any signal from a stick sandwich. It's a different look entirely. Now, let's look at the Qs, because that's going to also be important. What's happening in the Qs is what's influencing the SPY. And the Qs, the same look here. You see this, again, cupish and handle kind of formation that we see right here. So this resistance that we see here is important to stick if we have more downside. Otherwise, if we break through, we'll have some more resistance right here in this formation, of course, at the top of the breakdown candle. So I think what's going to happen in the top of the mind of investors, the Q's is weaker, and that's where the majority of the rally was coming from. So if we continue to soften more in the Q's, I think that's going to influence the SPY negatively, despite the fact that you see the breadth improved yesterday, still improving today. But here, we have to look at the components of the Q's to make a judgment. So let's begin one by one. I will start with Apple, most influential one, and they're kind of pushing Apple a little bit higher today to influence the tape, really. That's what it's all about. And here, you see the same look that we see in the SPY. So let's look at the flows here for Apple and see what happened, what they bought today. We go to the buy side, out of the money, or in the money, because it was out of the money at the beginning of the day. We need to look for the expiration dates that are really near. And you will see at the beginning of the day, the 230 called almost computerized flows. You see those, it's probably the same kind of institutional side that's been doing it. 230, 230, 230. They got two different expiration dates here, but the July 12 is the one that we really care about because that's coming out today. And I mean, even all the way till now, the buy side is coming from 230. So we get to 230 and then we stall, waiting for more feedback. So you want to look for the 230, whether it's being closed or not. In here, we're not seeing closing of the 230. Once we went here a little bit, there's some 230 being closed here, but we need to see a little more of the 230 being closed. But where's the puts? Anybody buying puts? Not today, because expiration date happening really soon. But you're going to look at next week, the 19th. We need to see buy out of the money for the puts. We're seeing it here, 230 beginning to show up in Apple. So that explains why we stalled here as that feedback began to show up. And if we see more of that, buying the 230 and then closing the 230 for this week, you'll get the impression and the signal that, okay, Apple got a rebound here, and I'm probably going to head back down to 230, and that's going to pull the SPY down with it. So Apple is really important to watch. The other one is NVIDIA. What's going on here with NVIDIA? If we look at the flows that we got for today, the expiration date of today, buy side, we'll look at both in the money and out of the money. You'll see that we've seen 130 showing up. A lot of bullish calls showed up all the way to, let's say, 8 o'clock. Then the bearish feedback began to show up. But it's the 130 number that we identified in the morning brief is the important one, because that's the maximum pain for the puts that were bought yesterday. So if we look here on the sell side, are we closing those 130 calls, not the puts? Are we closing those? And if we look here, 130 calls, a little bit here, but we're not seeing it here. We have some 130 calls being closed. So we're seeing some of those. Sell the 80 calls. This is an influential trade here, $5 million. But we need to see buying out of the money puts for the expiration date of next week, which is July 19th. Let's see here, the 19th, we're seeing some puts. Not a lot. We're seeing 120, 129. The 130 was a big one here. 130 beginning to show up. So you're beginning to see some counter feedback showing up in the market. And I think that's going to continue to increase as we head to the close. So that's what I'll be watching for. If I see that the 130 puts specifically being bought in NVIDIA, and then in Apple, the equivalent would be, if we go back here, will be the 230. If we begin to see the 230, 130, so 230 Apple, 130 NVIDIA being bought for next week, then that's going to influence the tape and push us down. And you see the SPY also being pushed down based on the influence of Apple and NVIDIA. Other components, Meta. Anything going on here in the daily chart? Rejection of the 531-ish line. A little bit of failure here, but not enough to say that Meta has turned bearish in, let's say, the weekly chart perspective. It's just struggling here on the daily chart. Could see more of that, but I think that earnings will stabilize a lot of these drops that we've seen until the reports come out, and then we'll see the judgment day for those. But the point being is Meta's not the one influencing the tape today. And Google, the same thing, stalling here, got a whack, changing from bullish to bearish. So we might find some stability at the lower 180s here in Google, but earnings coming out soon. So all of these are going to begin to stabilize as we get to earnings, and whatever happened there is going to influence the next move in these names. But Google, Meta, not the influencer today. Microsoft, same thing. Once we turn bearish here and begin to drop down, you see the change in momentum, and we continue to drop down. A little bit of a rebound today, but the assumption is we stabilize probably here at the 445 levels, and then see what happens when the earnings report come out. Because you look at the Vortex indicator, also giving us the signal that the bearish momentum is becoming dominant here. Microsoft bullish coming down. We'll see a crossing, which is a confirmation, but that means also that you're kind of a little late to enter any puts at this point after the confirmation is already in, specifically if you have earnings coming out. Okay, so it's not Microsoft, not Amazon. Let's see Amazon here. Amazon, not really. It's actually shifting back to bearish. So you folks need to understand this. You're looking at the indices right now, you're getting one impression, but look at the components that really move the index. And you saw what happened yesterday when the big caps underperformed. The indices didn't matter. The IWM had an historic rally, but it didn't matter. The indices went down either way. So you need to look at these guys right here. And Amazon finding support right here. I think it breaks it, and it probably stabilizes at the top of the box with the consolidation pattern that we've seen before here. Let's call it 190-ish, 188, and then we'll see what happens with the earnings report. The XLF today, because of the bank earnings, we're actually moving higher. So the XLF has an influence on the tape too, and it's moving higher. That's pushing the tape higher. A lot of the move higher in the SPY today actually coming from the XLF, not from the technology cohort. Otherwise, we've seen the Qs being the leader. But the XLF is responsible, I think, for a lot of the pop that we've seen in the SPY today. If we look at other components, IGV, anything here, maybe a chance for the IGV to begin to recover. I would say that not enough here until we close above at least 87.30. What I see is probably drop and then a little bit of a rebound, then we come back to the target here and finish it. So not seeing the opportunity here and buying the dip in the IGV, not yet at least. Let's look at crude really quickly, see what's going on here with crude. Stalling, and there is that risk that we talked about yesterday, folks, that if you see this happening, it's going to get bad for the oil stocks specifically. But if we hold and we crack over the 84.50 is my number, I think then we're good. The weekly chart will play out in the crude oil, and we'll see oil stocks joining. They can't lag too much and too far behind the commodity price. The other thing I want to show you is GLD gold. I mean, didn't matter today, got a little bit of a drop. It was too hot yesterday, but it caught up and made up the gap, and I think it's trading positive now. So GLD, that's the one that if you want to buy anything, you want to stick with the GLD because that's the one that's going to work in either scenario. Rotation, no rotation, a recession, no recession, doesn't matter. It's just going to work out the same way. Bitcoin, really quickly before we take your questions and comments. Bitcoin, anything changing here? Not really. Been shifting to bullish. Couldn't do it here, shifting to bullish, but not giving us any signal in the chart itself by cracking above any prior resistance or any moving average. 20 still far away, so nothing we can do here in Bitcoin. So again, folks, what really moving the tape today is the XLF. So we want to look at the hourly chart here and see where it could stall. It's really overbought here, really too hot. So you'll see some profit taking before the end. And Apple, you want to look at the options market. That's what's been moving Apple. And of course, 230 puts. That's the one that you want to watch, whether they showing the flow or not. And NVIDIA, that's going to be the 130. NVIDIA weaker than Apple, to be honest with you, because Apple, I think it's easier to push higher than NVIDIA at this point because NVIDIA also has institutional outflows where folks are booking profits and taking money out of it. Anyhow, we'll continue to watch here, folks, but let's see what you guys are thinking about today. Okay, turn your mic, gain sensitivity, volume up, Big Mav. This is the highest it goes. In the videos, we up them manually, so this is the highest it is. But we can, let's see here. Let's see, while we're doing this, and I can fix it later. I can do an increase of the gain just for the stream here. Let's see. You tell me right now, okay? As I'm doing it, you tell me. Let's get it to 20. Here we go. Are we good now? Can you hear me fine? I think you can. That's a lot better. Okay. We'll keep it like this, folks. Just increase the gain a little bit. Okay. Maverick, hope as well. I can hear. Thank you so much, Ryan. Meta, could you further comment on today's drop? Do you see a rebound next week? You're holding the 510 call at July 19th with 45% loss. The 510. Thing is, with the expiration date that you got, 7/19, that's, let's see if it's inclusive of this or not. That's not inclusive of the report. So you're not going to benefit from any implied volatility coming from the report. The 510, I would look at today's action, to be honest with you, and we have a level of support that you need to look at. In the low here, you can see that the chart found some support and rallied after that. So we know that here we found buyers, reliable buyers, that stuck with the move higher until they sold right here. So we want to identify this low right here, which is 493.17. And we kind of flirted with that today. If we lose it, I would say there is no chance we can do the 510 by next week. Otherwise, if we close above, and specifically if the SPY closes positive as it is right now, there's no pullback by the end of the day, then I would stick with it, because you're probably going to see Meta closing this gap. Comes Monday, Tuesday, you'll be above 510, 511, in or around that number. So you want to stick with it unless we lose 493.17. Then it's not going to happen. Okay, above any color on options flow, let's look at the option flow here for Meta, see if there's anything showing up for next week. Meta, if we look at for today, I mean, there's only buying of the 505 calls already achieved, I think, earlier today. So besides that, the sell side here, they sold the 505. So you guys need to look at this every day. And hold on a minute here. I might have increased the gain, folks, but it's kind of annoying, to be honest with you. So we just keep it as this, and I'll try to raise my voice a little more so you can hear it. Anyways, let's go back to the flow of Meta here. You need to look at this all the time, folks. The buy side, this was bought 505 with about $95,000 July 12, and the time was about in or around 7:35. If you look at the sell side, the same put here, the 505 was sold, and they sold it about a minute later. Yeah, about a minute later. So this was a quickie. They sold it for about 135. They sold maybe a little more here from some position that they held before. They probably averaged down in the morning in the 505, and they sold it right away. So there's nothing influencing Meta today at all, besides the 505 trade that we got. So we have to look for next week, 7 days out. And the buy side here for the 19th, not showing me. I mean, they have the 510. Could work out 520, a little too aggressive, so I wouldn't do that. But the 510, there's somebody with you here agrees that we could go to 510. The other hand, there's a bigger trade coming from the 495. So we can't make a decision based on this. Let's look at the sell side for next week. The 19th, we only have one, selling the 520, which means that this guy who bought the 520 here, they spent about, let's say, $140,000. They sold the 520 for the 19th, and let's see if they made profits. They spent about $200,000, and they sold it for almost same amount. So they didn't make a lot, but that tells us that this trade is not really important, since somebody bought it the 520 and then closed it right away today. So this trade still the dominant trade, the 495. So again, the risk is not with you right now, not in your favor, but if we close above 493.17, I would say that, and the SPY, you see it closing positive today, and the VIX closes down, then I don't want to panic and close it and then regret it Monday if we see Meta catching a bid. Okay, the SLV. Let's talk about the SLV here. Do you recommend call options or short calls for share acquisition? If you want to build a position for the SLV, you can buy the calls. I mean, today we got a little bit of a drop in silver. But I think we'll continue to move higher because the dollar is weaker, and you'll see these flows into gold and silver. Gold recovered completely today, so usually that leads silver also higher. So I'm going to stick with silver here. And if you want to buy some SLV, I would say you buy in the money calls, and you go with the expiration date that is the monthly, the nearest. If you close above, just convert into shares. That'll be the easiest way. Now, you can sell a put. You can't sell a call and buy. If you sell a call, you have to sell it above, and then if it hits, you could be in a bit of trouble, though, because you might buy under what the current price is. So if, let's say you sell the call at the 29 level, and we're trading at 30, then you're going to have to buy it at the current price and then sell it at 29. So the way we do it is usually selling the puts. If it drops down, if you see it dropping down to 27 or 24, you can sell the puts and exercise them later. What you can also do is buy a call out of the money or in the money based on your preference, and then sell a put on it. In case if it goes down, you have an option to buy it at a lower price. That's another strategy, but I would just stick with the calls right now. That's the easiest one. SLV is cheap. I will buy the either 28.5 if it's available or the 29 calls, and if they hit, exercise and own the shares. And you notice that owning the shares in these a lot better. I mean, they're really good in trading, let's say, lotto tickets for the week. They're a good mechanism. But if you look at GLD, for example, if you owned calls or puts throughout all of this consolidation, you likely didn't make a lot of money unless you sold exactly at the tops or the drops here. So these kind of assets, these gold for now, is more of a buy and hold rather than trading via options. Mav, what site do you use to monitor the OI change? Even you see it in your broker, by the way. It's the same data. It only updates once a day. But I'm using bar chart here. And the open interest is basically what they bought yesterday and held overnight. And we see here, for example, the 560. Over almost 18,000 contracts were bought yesterday. The puts, nothing was bought yesterday. Besides what they bought, yesterday, if you looked at this, it was all big numbers. Which means that before the CPI, they bought a lot of puts. But after the CPI, after the drop, they closed them, at least some of them, and they actually bought calls. And that's what influenced the market maker to move the tape higher today. Options have a lot to do with what happened today. But you see it in your broker too. It's the same thing. Okay, smells like all time highs are coming before rate cuts. I'm looking at setting up trades for the Qs and the SPX. Then focusing on commodities futures after the cut begins. Which commodities do you like? We'll stick to what happened yesterday. What moved yesterday would pretty much told us in advance what will happen if the rate cuts take place. That'll be grains. That'll be the gold, silver. Metals will be okay. They're always sensitive to the dollar. Softs, you have to be picky. Coffee's still okay, but I think it moved a little too much in a short amount of time. The energy cohort, it's been working either way, so we want to look at whether it's going to keep the important levels that we identified yesterday or not. In UK oil, for example, we need to keep 85. If we keep 85 and we trade higher, then you want to be long in crude oil. But if we lose 85, I would stick to the metals right now. The metals are the more sensitive ones in terms of commodities to the movement of the dollar and rate cuts and all of that. Grains too, but grains you can use it via stocks. You can use either the agricultural cohort here. So you got the fertilizers, Nutrien. You got Corteva up about 1% today. Mosaic up over 1%. You can do Deere. Deere been oversold for a while. And if we have rate cuts, not only benefits from the dollar going down, and you see international sales and margins improving, but also if we see a rally in wheat or corn or soy, it will also be good for Deere. So Deere is also worthy of consideration here. Now, as far as whether you want to go long the SPY before the rate cut, I would say, look, if we close above the handle today, then that would tell us right away that yesterday was just a one-day wonder. If we close above the high. Even though, this is all continuous move that we've seen. And it would be shameful if you get in and then we drop down Monday and we complete the move to the downside. And you realize that today was only options activities in exercising maximum pain of what was bought yesterday and today. So I would say that if you're going to buy focus on the individual names rather than the index right now, because what happened yesterday. Look at what you like in the individual names, because if we see a rotation continuing, and right now the IWM, if we look at it, we're probably going to see more declines here to come. It looks like a topic candle. We're probably going to see more pullbacks here in the IWM to soften it a little bit. But my hunch is the IWM is going to consolidate here before it continues to move higher as we continue to talk about rate cuts. So again, maybe the thinking about going to SPX is just being influenced by today, the rebounds they're getting in NVIDIA and Apple. But the other cohorts are weak, and those two could weaken as we head into earnings. We see the SPY going down, the Q's going down again. And the IWM is the one that actually sticks. So you have to really consider whether today's based on options or not. And if the answer is not, then look at the individual names and pick what do you like in those individual names. Hey, Mav, took the SPY 50 puts 2 days ago. Could you discuss how to manage? If you have the 920, here's what I would do. I would look at the SPY, and again, if we have a closing above, just to be in the safe side. If you have a closing above, the previous high yesterday was 562.33. If we close above, really close. If we close above, I would close the 550 for September for now, just to be safe. If it is proven that today is just based on options, and we lose momentum right here, and we begin to trade down, then okay, I'll put it back in, and this is probably going to be sort of a double topish formation, and we'll see more declines in the index. But today, watch the close. If it appears that we're going to close above the top of the candle from yesterday, I will get out just to be safe. Do you recommend setting automatic stop losses when entering option position? What stop losses would you use on short-term and long-term trades? You can do automatic stop losses. You can't really do them in options. You can do them in stock, but if you're doing them in options, it's the limit price. So you can set a limit price to sell, and the problem is if you hit that limit price, you're just going to sell your... If you set it lower than the price that it is right now, it might just sell right away. If you set it at a price above, you might sell and then miss on the gains that happen after that. So the way we do stop losses in options is going at the trade, any trade. Let's say right now we're going to buy puts on Lucid next week because it went way too high. So we're going to buy puts on Lucid. What do we need to see here? Implied volatility is way too high, by the way. I just traded this. But for today, Lucid for today, day trades. And it was lucrative. And one pullback that we got right here. If you look at the 1 minute or 3 minutes, we got a little bit of a wick here. If you took a shot, we got a little bit of a drop. Then there was a wick here bottoming. And that trade was pretty good. I mean, it produced 100% just in a little bit of a drop here because of the insane implied volatility. So maybe this is not a great example. Let's use a regular stock. Let's use Mohawk. So this guy went really high yesterday. I mean, look at MHK. I'm looking at an entry here for all of these names. So Mohawk, the home builders, I'm looking for short entries anyways. So let's say that I'm looking for a short entry today on MHK. I'll go with July 19th. I'm looking for a pullback that maybe takes me down to 120-ish right here. So let's take the 120 puts. A little too far, to be honest with you. So we'll take 125. We're at 126 right now. You identify your stop loss based on the price. So what price, if we go above, the trade will be way too far out of the money and there's no chance of recovery. Of course, the technicals come in mind here. And you look at the chart for guidance. Here, we stopped before in this candle. So we'll take the top as a guide. The top is 126.62. Here it is. If we close above, the likelihood is that we have a gap here to fill. We have different targets to go fill up here. So if we close above, the likelihood is we have more gains to come. So that would be my price cut loss. If I see this price, I'm going to cut my loss and take the trade out of the picture right away. Now, there's a time cut loss too, which we talked about before in details, which is half of the time that you have here. You can take the 17, I'll take the 16 to be safe. By the 16, what should happen for me to keep the trade? And the answer is it should be in profitable territory. Not just in profitable territory, but has a little bit of cushion because the expiration date is really near. This is a short-term play. So we need to be here. We need to be at the 122.5 level for me to keep the trade. And if we're not, if we're hovering at 124, 125 and a half, probably not a good trade to keep. So that's how I manage the stop losses based on a price perspective and a time perspective. But if you do a limit price in your options trade, not a good strategy, because either it's going to sell at a loss or you're going to miss some gains in the trade. Okay. Amgen, I know you have some of this still, Mav. Thank you so much. Catherine, thank you for joining, by the way. I haven't seen you here before. So let's look at Amgen here. Amgen, we talked about this in the weekly charts to watch, by the way. And we talked about a cup and handle pattern. It is breaking out. It is closing above the previous candle. So I think that we have more gains to come in Amgen. So if you have it, I would say stick with it. If you don't have it, you want to consider buying it because it is a value name still in pharmaceutical. But man, the daily chart is a little too high here. So I wouldn't enter a new position. But if you have it, what I would do today as a shareholder of Amgen is sell some covered calls for next week's expiration. So I would go probably here, Amgen. On the 19th, I will be seller off. Let's see what we can get here. The 335 will give me about $300 if I sell it. So we'll do sell a call because we're shareholders. And we'll get a credit of about 300. We can go to the 340 if we don't want to be too close in case it rallies even more. You get about 125 for selling the 340. So it depends up to you. I will sell the 335. I don't care. And if we go above, either I'll buy it back or update it for a newer date like August. And then either sell some shares. So I don't mind selling the shorter term covered calls, even if they're close to the money, because you can always take them out and they decay in value usually, even if you're at or a little near, a little above. So consider selling covered calls if you're a shareholder. If you want to enter, I think you get a better price. I think we'll pull back a little bit in the daily before we move higher on the weekly chart because we have a closing above the high here. And the momentum is still good. We're not overbought. So I think that Amgen is looking pretty good here. IWM. Okay, thank you, Catherine, by the way, for joining. I didn't see you here before, so it's good to see you. IWM bought 210 puts, 8.16 today for a short-term pullback. Any flow in this play? 210. We'll look at it in a minute here. 210, we're going to look at the 10 minutes chart just to see what's going on here. I mean, it is still gapping higher. We got a little bit of pullback, so I don't know where you got into it. Maybe here or here, depending on the entry. But anyways, let's look at the IWM, the 210. And you don't want to go too far, by the way. The 8.16 is a little too far. So if you do July, you're looking for a pullback. And let's buy the puts, 210. If you go to the 16th of August, you're spending a lot of money. And I think that the IWM has a positive tailwind right now with the rate cut optimism. So I don't want to go that far. In pullback trades, you want to go a little shorter because you don't want to spend a lot of money. If it continues to go higher, then the decay is just going to kill you. Now you spent $300 on that. So we go to the 19th, and we look at a pullback of about 2% after a gigantic move in the IWM. That's reasonable. Another way you can do it is go to the money and then sell the 210 if you think that's going to be support. You look at the risk versus reward. What am I spending? What am I getting as max profit? This is not good enough for me. I mean, it's almost 70% gain, but not good enough for me. Okay, can we do something as the 210 if I still want to do the 210? But there's a lot of risk involved that the IWM could continue to go higher. So can I reduce my entry cost as much as possible? So if it goes the other way, I'm not losing a lot. You can do that by selling the 225, 206, and lower that a little bit. So you have to consider that when you're constructing the trade. If you think 210 is good, and that's a reasonable place for a pullback, then look at the table right here. You need to see a pullback today, okay, for you to have a little bit of cushion. Because Monday, a lot of decay is going to kick in. So you need to be in this territory right here before the end of the day. You need to be at 211-ish. So we look back at the chart. What are we doing here? Still stalling. Maybe we'll see a pullback to 211 at the end of the day, but that requires us going negative in the IWM. Let's look at the flows now. This is how you construct a trade, folks. Before you do it, you need to look at everything to make sure. So you look at the IWM, we want to look at the expiration date of the July 19th, next week. Are they buying? Do we see somebody also buying the out of the money puts? And the answer is no, we're not seeing it. We're seeing here the 208 showing up a little bit, but that's for July 15th. 19th, it's all calls, 220, 220, 215, 217. So I know there'll be a loan if I go with the 210 puts. Okay, let's see the sells. Maybe these guys are buying and selling right away. So we need to see if they're selling right away. We go look in the money. You can't look out of the money because some of them are already in the money. We have to look at the 19th. They sold the 210th, but I'm not seeing the 220s being sold. Okay, the 220s are not being sold here. So I know right away, if we go back to the trade, I know right away that the odds are against me in this trade if I go with the 210 for the 19th because there's nobody else doing it with me. So the judgment now becomes, do you want to still enter the trade or do you want to wait for the feedback to show up? Because usually when the feedback shows up, the move already is happening. So if that is the case, then you need to de-risk as much as possible. And I would say that's why in the money, puts will be an appropriate entry, like the 215, and then we'll sell the 210. That way, if you have a move higher, let's say Monday, and the IWM is up over, let's say, half a percentage point, now you're not losing too much, right? You're losing 25, 34% of the trade, and you can get out right away. But if you have the naked 210, and you have a move half a percentage point by Monday, you already lost 75% of the trade. So these are the kind of consideration that I will give you as an advice of what to do for the IWM trade. Okay, LD Easy. Good to see you here, finally. Since IWM and Dow Jones are up, are we seeing the broadening of our rally? Should we see it as broadening of the rally or dash for trash? I think that we're still in a rotation mode. Okay, I mean, you look at Meta. Let's refresh here just to be accurate. We look at Meta, we look at Google, we look at Amazon, we look at Microsoft. You have the two exceptions with these guys here, Apple and NVIDIA. But these guys also have earnings coming out. And I would think that we'll see more rotations. So you see a lot of these companies actually giving us good earnings, but you see them sell off anyways. Why? Because the good earnings are priced in. And the judgment will be by at least asset managers, look, maybe we tapped out here in these big names, and the earnings will stall here, if not coming down. And so they have to rotate. And I think that the rotation trade is still on. The only problem, though, if in the indices level, would be this cohort right here, the AI chip mania. This cohort still catches a bid, and the rebounds are being bought. So the big caps, I think the XLK is the weaker link in the Qs and the SPY. The chips, you need to see a major report showing up soon. And I think that we have Taiwan. Let's look at the earnings here. I think we have Taiwan coming really soon. Where did you go? Earnings date. There we go. We have July 18th. I think Taiwan comes first as I anticipated. So this is going to paint the tape for the rest of the chips. If Taiwan comes out disappointing, then you'll see more exodus of the AI mania along with the big caps. So I'm going to stick there with the rotation has the upper hand here. And the rotation is not just happening in the IWM, by the way. Rotation is happening in elsewhere, in Home Depot and Lowe's, in the home builders, anything that's yield sensitive that will benefit from rate cuts. And you see it even here. PepsiCo was bad, by the way, yesterday. But PepsiCo up over 2% today. Why? Because if we assume that yields are going to go down, then dividend stocks will benefit. And this guy, STZ, was looking at it earlier. Philip Morris, a lot of you owning Philip Morris. That will also be a benefactor of the interest rates going down. So it's not just the IWM, folks, or dash for trash. Dash for trash is among the rotations. It's up to you whether we're going to chase them or not. I think they're not going to hold. I'd rather go with the high quality rotations that I'm seeing, which were identified yesterday. I mean, look at the Chinese equities. They're doing pretty good. Lots of opportunities happening here in international markets. We'll see opportunities also. I mean, the XLU, why not choose this guy? I mean, XLU, if you look at the chart here, not only works because of the rotation and the drop in interest rates favoring dividend paying stocks, but it also benefits from the macroeconomic situation that we have. And right now, look at this. Bull flag breaking out, plenty of momentum left here, not overbought yet, so I think the DXLU will make it back to the highs. So you consider that instead of the zombie companies or the IWM at this point. And by the way, somebody brought up the question in the comments yesterday. What about the IWN? The IWN is okay, but the IWN, this is the M, IWN, which is the Russell 2000 value. The IWN is okay. It's much bigger than the IWS, by the way. The only problem that I have with the IWN is the small cap nature of these stocks. And we've seen them rallying before. I mean, you see the rally here and here and here, and they just keep coming down. And here will come down. So the beauty with the IWS is you're actually betting on mid-cap stocks. And this is why you see it's outperforming today, the IWS. So I want to stick with this guy here. And the reason is you'll see the components of this guy, higher quality names that you can recognize in the mid-cap tier. So they're not zombie companies. They don't have pressures from profitability, the top lines, the bottom lines. So I want to stick with the IWS here, folks. And I think we are outperforming the IWM today. Let's check on that here. If we just look at today's performances, right here. Yep, we're outperforming. Whoops. Let's clean up the chart here. This is the annoying thing with this guy here, Trading View. If we look at today, Friday. Give me Friday, please. Here it is. The 12th. Okay, we're outperforming. So the IWS is up about 0.75%. The IWM is only 0.25%. So yeah, I would stick with this guy. I think my judgment is correct on it, that IWS is the better choice. Okay, Fan, hey Maverick, for trade ideas that you open an options tracker, chance, would it be possible to include your risk level and price target for me to assess, the potential risk to reward? Okay, so this is a good question. A lot of you asked this before. What I would say is the risk versus reward depends on what we just talked about in assessing the trade here in the IWM example. So this has to happen all the time. And I'm trying to figure out a sort of a ranking mechanism from, let's say, 1 to 5. And I haven't figured out that yet. But if I do, for example, can we assess a point for the flows? Are we seeing flows or not supporting flows? And that gives us a point or lack thereof. And then we have sort of a scoring meter. But to assess the risk of any trade, whether it's risk and reward, you have to look at the patterns. So we looked at this before, folks. The falling wedge happened to be, for example, as a pattern, one of the highest risk versus reward. Because when they play out big, and they could pay massive appreciation in call options. You can look at DraftKings, also famous falling wedge example here. Huge gains after that. So the falling wedge, and you can see it here, by the way, a little bit here in this sort of a falling wedge, and then you see massive gains. So who's this now? Anyways, the falling wedge pattern is one of the highest risk, highest reward kind of patterns. So it goes without saying, if we give you any trade for a falling wedge, understand that it's highest risk, highest reward. And why? Because the falling wedge could be a falling knife. And sometimes, in the case of Shopify, the falling wedge might not play out and just consolidate a little bit until it finds footing and demand, and then it moves higher. So it requires longer expiration dates. Now, there are other, let's look at Thermo Fisher. That's another example that we talked about here. Oversold. Oversold is another setup. Oversold also comes with, I would not say it's the same degree of risk as the falling wedge. It's a little lower, but it's also high risk, high reward. And you can see here that we identified a rebound in Thermo Fisher maybe right here. We got a little bit of a rebound, but we went down again before we got the break. So would you have high risk versus high reward? High risk, high reward kind of setup from a falling wedge or oversold? What is the lesson that we've learned from the trades that we've done recently? You need longer expiration dates, longer than you think, because either it's going to take longer to play in the case of Shopify, or it takes a few more days to find the footing in the case of Thermo Fisher. Also, And when we look at high risk versus high reward, we need to identify when do we cut loss. So assume that you cut loss here in Thermo Fisher, right? Because you took the trade right here and it went down, you cut the loss, next thing you know, it actually went higher. So we need to identify the low right here, the last support, as the cut loss. And yes, got into it here. The trade went down. We're underwater now in the contract, but then boom, got the rebound, we went higher. So identifying the cut loss price-wise is really critical in these setups, but also having a longer expiration date can really hedge. So if it doesn't work out in time, you have the luxury of getting out with minimal losses. If we cut below the price cut loss target, your losses are not going to be big with a longer expiration date. Now, another setup, for example, let's look at AVGO. A lot of folks think that AVGO overbought. So we looked at oversold, right? Let's look at overbought now. If you look at the overbought setup, you could have said that it's overbought here, and it popped higher. You could have said it's overbought here, and then he got it right, finally. So the overbought setup is also high risk, high reward, because once it plays out, you get a nice, juicy drop to the downside. I would say it's more dangerous than the oversold setup. So in this case, we also have to do the same thing, have longer expiration dates, and the difference between oversold and overbought is in this case, we enter via increments, because you might not get it today, but you get it later, tomorrow or next week. So that's the only difference that I would add between the oversold and overbought setup, that you enter via increments, but it's the same thing. You have to identify a cut loss price point, whatever that is, although it doesn't become relevant here because you have no point of reference when you're at all-time highs. So again, if you like this conversation, folks, just let me know in the comments so we can expand on it in the options trackers videos. I can show you all of the setups, the butterfly setup, not just from the candlestick pattern, but from the trade structure, the butterfly, the diagonal, the credit spread, the naked, and then we can assess the risk versus reward for each setup and also for each pattern that we see in the charts. If you like that, let me know. We can do it in one big course, or we can do it in smaller videos based on the trades that we've done recently. Anyhow, Mav, check your phone as soon as the stream is over. I'm checking my phone right now. I'm not seeing anything, so make sure that you send me something. Yeah. Okay. Gotcha. Yeah, I'm aware of that issue, by the way, Knox. We'll talk about it later, but it's the only solution I can find for now. What IV is way too high that makes you not want to buy options. So today I was looking at Lucid, right? And when you look at the high IV, the moment Lucid, I mean, this is an insane IV, by the way, 171, it keeps increasing as we speak. It was 150 when we began, but now it's at 171. I was thinking about buying some puts on it. So let's look at Lucid here as we give you this example. It is getting squeezed, no doubt about it. But if you buy Lucid puts right now and the chart stalls or even drops, and if it's not a bigger drop, you'll lose money. I'll show you why. The implied volatility will go down because now the market maker is pricing in folks buying insane calls out of the money and also buying puts, betting that it's going to go down. So once the implied volatility drops, you have to do this exercise also when you have anything high implied volatility. Okay, I bought the 4 puts. July 19th. Actually, when I did them, I traded for today. So you can trade them today. This is the most juicy and lucrative window of trading. You could go to the 12 and it'll be even juicier because, you make 100% in just a little bit of drop. But anyways, if you go with the July 19th, now we have to assess where do I need to be by Monday? Suppose that the stock consolidates or drops as I anticipate, but the implied volatility goes down. Where do I need to be for the trade to be profitable? Decrease the implied volatility, something reasonable like 120 or 100. And now you'll find out that you need to be, by Monday, you need to be at the 3.6 territory. You need a drop of about 14% in Lucid. Reasonable? Could it happen? Yes, but it's also extreme. 14 would take us down right here. If it stalls, if it moves higher, if it moves down, but not by 14 or more, you lose money. So again, the trade kind of goes against you under high implied volatility. The best setup that we can do under high implied volatility is the following. If you're a shareholder, you sell covered calls. That's always the strategy. If you're not a shareholder, what you need to do is either buy the puts. If you think that we're stalling, you buy the puts, but for longer expiration dates, so the implied volatility is lower. And then you buy calls as a hedge. So you switch to the calls for shorter term expirations. You go out of the money, you don't go in the money. You go out of the money. So you can spend as little as possible. And that'll be your hedge for your put for August. Okay, so that's how I trade high implied volatility. And you see the same thing in Tesla, by the way. Okay, Stefan Savage. Looks like it's best to just let the market settle today and reposition Monday. You're still coming over this weekend to help me plant the vineyard. Yeah, I'll try, man. I mean, you have a better garden than I do. I can bet on that. Have a good weekend, Stefan. We'll talk to you later. Although I think that we might see a lot of interesting stuff by the close, right? Because today's is very mechanical in nature. We're above, by the way, the highs of yesterday. So we'll see where we're going to close, but I will watch the flows, and I think that we have an interesting close to come. Today is very mechanical, so which means that we could see volatile moves at the end. Okay, got NVIDIA. I mean, got NVIDIA 719, 125, 120, and then 115 butterfly spread for 65 cents. See, that's a good setup, right? Because you're not spending too much. Do you think it's a good trade, and should I get some profits next week, or do you think it will go against me? Well, you need to be below 125, but not below 120. And right now, I mean, you're not spending a lot of money, and you're at 130. NVIDIA is relatively weaker today than the rest. I mean, it's kind of moved higher, but it is stalling. I would look at the daily chart here. Anything changed in the daily chart? Still holding on to 20, not seeing a positive crossing here, and you spend about 69 cents a piece. So if you think that NVIDIA is going to go down, that's the best trade setup that I can find. Maybe the better one would be at the 130 level, but again, why spend more if NVIDIA is going to go higher Monday? So I think that you have pretty much the perfect spot-on setup, spending about 69 cents a piece. Just make sure that you're not spending a lot of money because the cost of the contract is reasonable, but are you spending a lot relative to your brokerage account? That's what I'm talking about. You don't spend a lot in these trades. Okay, Zanskar. You got the 290 calls, 719, 35% loss. First time playing on GD. Doesn't seem to be an option play. Should I close today? GD, I mean, it is rebounding, so I don't want you to abandon this. It is working out. 290 is close, but you're right. We're not seeing a lot of volume of options in this name. This is why you see the value maybe. It's showing in your screen that it is down. But if you bought it here or here, it should be up. And the moment you get closer to the money, you'll see volume and the value will improve. I don't want to abandon it here. I think it's working out. And if we see the moving averages, if we look at it, 20 is still above, 50 above. So we're not going to look at moving averages here. A little bit of resistance, but it's working out. I want to keep it. I don't want to abandon it here. PFE, hoping to sell at slight positive break even after the ex-dividend. The option seems in dump. I know you like Moderna and Regeneron. Is there a specific entry point you recommend? So Pfizer got really good news yesterday. But Pfizer has the tendency of just, anytime it gets a pop, it fades away right away. Today it's keeping that pop. And it looks as if Pfizer has some momentum behind it. So if you have Pfizer calls, stick with it. You actually want to trade Pfizer to own the shares. That's the only way I would trade Pfizer. Is if I look at the weekly chart, for example, and I think that, okay, maybe we're seeing the light at the end of the tunnel here. It's been consolidating, maybe forming a bullish pattern. And now with the good news, we might see by the end of the year, maybe Pfizer at 35 or 40. Then I want to buy the 30 calls, hold on to it for not July, but August. If we're above 30, I want to convert into shares. So that's the only way I would trade Pfizer. But I don't want to play the gambling of, I want to buy a call and then close it or put. That's not a good play with a name like Pfizer. Now, Moderna, on the other hand, is very tradable via call options. It's not actually a good fundamental stock, by the way. It's not a profitable company, but it's a good tradable mechanism. And here what we're looking for, when we look fan, if you're listening still with us, we were looking at the falling wedge. High risk, high reward. But sometimes it takes a lot of time for it to work out. But the support was never broken. The support was holding. Then we got the break finally, yesterday and today. Now we get sort of a rejection candle. So this is the point where we book profits and we end the trade based on the feedback that we got. If we go above the 20, and there's a possibility that could be the case, if we go above the 20 and we have a confirmation of bullish momentum, then we'll do another setup here. We'll aim for the upper Bollinger Bands and we'll do a call debit spread on Moderna. But right now, if you got the 125 or the 120 calls that you accumulated here, that's the time to book profits. So Moderna is more tradable than Pfizer. Regeneron is, you can't trade that guy. I mean, it's $1,000 a share. So Regeneron, I mean, I've been owning this guy for a long time, by the way, so I can't tell you to buy it right now. I've been shareholder for Regeneron for a long time. So I can't honestly with good conscience say that you should buy it right here with this big pop. But it's been working. Every time it goes down, it just keeps working. I would look at maybe Thermo Fisher as a good entry here because this name is a high quality name. But it got hammered recently, so look into an entry for Thermo Fisher. Maybe that's a good holding in healthcare. And I do like healthcare at this point. Also remember, the recent sell-off in healthcare gave you opportunities to enter in some names. So Donner, old school name, but also been a top performer. So Donner got a little bit of a dip, now changing to bullish again, maybe worthy of your consideration. So you have opportunities to enter in healthcare. The other name I wanted to show you is Stryker. Really high momentum, but it cooled off recently. So maybe, I mean, you look at the rally that we got with Stryker. Then the rising wedge pattern here, we broke. But we found some stability, folks. We found maybe sort of a cup and handle. So Stryker could be a good opportunity to buy. There's a lot of stuff, high quality stuff that you can buy at this point, folks. Besides the NVIDIA and the Apples and the Meta, which I think once they hit earnings, they'll be sold off. So you have Stryker here looking pretty good. What else do we have? BSX is a little too hot. We talked about Donner. You have the ISRG. This is the hottest name probably. But it's been in a bullish trend and it keeps performing. Now, it stalled a little bit, so I'm going to avoid an entry here at this point. You don't want to buy CVS. BDX is another interesting name in healthcare. BDX, been catching momentum. This is an old school dividend paying kind of stock, and here you see it moving because of the good news that we got recently in the company. So that could be another one that you could buy and hold if you'd like and just capture the dividend if you want to construct a portfolio at this point. Besides that, I would say Amgen looking pretty good. We'll stick with Amgen. J&J looking really interesting lately. So J&J worthy of another look because it's been an underperformer. Garbage. Absolute trash. But now, find a footing and it's been moving higher in the last few sessions. We have a report coming here. If the report is good and we're trading at the highs after that, above, let's say, the 153, 155 level, I think maybe J&J should be a buy in the portfolio too because it gives you, let's see here, the dividend about 3%. And remember, with the rate cuts and interest rates going down, dividend stocks will begin to be appreciated a little more. So look at the map here, Finvis, by the way, and then go to the dividend yield. Forget about the banks, that's their own dynamics, but you want to look at these names with the dividends. Energy, of course, we don't buy energy because of dividends, it's just a cherry on top. But you look at dividends in these guys right here, the defensives. I mean, all of them have bad earnings and warnings about consumer, but they're working out just because of the drop in dividend yields, or excuse me, the interest rate bond yields. We see it here in some of these big pharma names. Utilities, obviously a top pick in this regard. Real estate at a void because of the risk of defaults and all of that. You might see even McDonald's and Starbucks benefiting from this setup. Let's look at these guys. MCD probably not doing so hot. So right now, stalling here at the 255, but still pays a good dividend. And Starbucks also pays a good dividend, and it's benefiting from this setup of yields going down. Problem with Starbucks is they might cut the dividend based on the lousy earnings. So I'd be careful with that. How about Ford? Ford pays a really good dividend. You can see that Ford exploding higher right away. So if it pulls back, maybe Ford is worthy of your consideration. But again, folks, a lot of people today would think that, oh, let's just go back to the same old, the Nvidias and the Microsofts. But I'm seeing the opportunity in the dividend-paying names. As yields go down, they appreciate more. And even in the asset management, you got Morgan Stanley, Goldman Sachs. Goldman Sachs is going to report soon, but it's been an energy release. I would wait for this report. If it dips, you want to buy it. Morgan Stanley, also a little too hot, so only if it dips. If it dips, then we'll buy these guys. But look at this cohort, folks. In Home Depot, Lowe's, we talked about this in another video, that when you see sort of a recessionary factor showing up in the economy, it's actually good for these names. And now we see Home Depot with the inverse on his shoulder, breaking above the highs here, so a little bit of resistance will show up at the gap fill. Then you look at Lowe's, that's also outperforming the Home Depot by a lot. So lots of opportunities here, folks, in the dividend-paying names. As yields pull back, they open opportunities elsewhere. And Verizon, stalling here, but it could continue to move higher as we see this not just dash for trash, but appreciation of dividend-paying stocks. IBM, let's look at this guy if it's performing or not. IBM, yep, IBM too. So dividend-paying stocks, folks, should be in your consideration right now. Okay. Let's take another one here, folks. Man, once again, I've burnt myself by holding it to SPY and Q's puts for too long. I thought we were finally gonna get 2 good damn days, and the big caps were ready to correct, but SPY making a new high. The problem is, when you see the options feedback today, the folks who bought the put options yesterday, they abandoned them right away, and they're flipping into calls. But again, I think there's interesting stuff to come here at the end of the day. I wouldn't open, let's say, SPY puts newer ones right now until we see more damage in the chart, unless we see a reversal and closing within the body, for example, of yesterday's candle, then that'll be an indicator. But look at it name by name. That's what really matters, because it's name by name moving the SPY. And Apple, for example, is the biggest, along with the XLF, of course, the biggest mover of the SPY. And that name is being played via options right now, as we showed you. So if we see put options being bought, it's going to influence the tape. NVIDIA, not doing much today, but the XLF, I mean, how high do we think this is going to go? The XLF at this point. So it's going to pull back at the end of the day, and we'll see the SPY weakening a little more. Qs, a little bit of improvement, but you see that the Qs is within the body of the candle of yesterday. So again, I think that a lot of folks will have the wrong impression based on today. They'll think that we're just going to recover and go higher again, and the same old guys are going to work out. They'll be surprised next week as these earnings roll in. Where do we have here? But yes, a lot of people yesterday on Discord said, I have the puts with the expiration date of tomorrow. Should I hold? Here's one lesson you need to understand about the expiration date of tomorrow and any trade that you got. If you're in the money, understand that any stall, any move higher will decay the value of your options, because you're in the money, you have tangible value. So, for example, if you're, let's say now we're trading at 563, hypothetically, and you have the 562, or excuse me, 565. You're in the money by 2 points. So that's the tangible value of the contract. If you hold till tomorrow, and again, this is hypothetical. I know that we have weekend tomorrow, but it's just hypothetical right now. If we have an expiration date for tomorrow and we stall like this, whatever time value that was on top of the $2 will disappear. If we go up, now we're contracting the tangible value of the contract. So when you have options expirations tomorrow and you contract in the money, you got to be sure that we have another drop tomorrow. If your contract is not in the money, it's out of the money but profitable, and you have expiration date of tomorrow, the risk is even higher, because the only value that you have in the contract, let's say, for example, right now in this case, we have the, let's say that we have the puts at the 560 or 562, and we see the SPY dropping a little more. We see appreciation in value in the 562. You have no tangible value, because the chart is not below your strike price. You only have time value. And the likelihood is, if you don't have a big drop that gives you some tangible value in the next session, then the time value will decay automatically in the expiration date. So if you have expiration date for tomorrow, any case, doesn't matter what we talk about, SPY or individual names, you always have to assess it that way. Am I in the money or out of the money? If I'm in the money, am I going to see a drop tomorrow or not? If I'm not sure about it, book profits, get the hell out. If I'm out of the money, am I going to see a major drop tomorrow? How oversold are we right now in the shorter term charts? And if the answer is we're not going to see a big drop tomorrow, and I'm not going to be in the money by a specific amount, then I better book the profit and get the hell out, because I only have time value, and time will decay tomorrow. But anyways, that's just for the expiration date, the zero DTEs plays. John, I'd like that video, the trade setup and structure, will appreciate more detail in managing price puts as spreads in the money or falls between butterfly body. Okay, that's a good question, John. On the butterfly setup, what happens if we fall within the body and we're above? Okay, if you're open to it, yeah. But we have two butterflies that we've done in the options tracker that we can look back to and study those examples. And I already have that video set up going on. I'd love to see one more example. So if you want to provide me with your example of a butterfly trade that you have right now or you've done before, doesn't matter win or a loss. I prefer that it's a loss, because the two examples that I got, they're wins. So I'd rather have a loss example in the butterfly, and I'll add it to my examples and study those three. Okay, for the option setup trading discussion, Stone, thank you so much. Ryan, you're not bothering me at all, my friend. Love to hear from you all the time. I'm getting a direct message from you on Discord talking about mirror trading or copy trading. Is this you? Absolutely not. I don't have the time even to respond to my mom, rather, let alone, spamming you guys with messages. Anyways, how long do you think the dash for trash and dividend paying chase lasts? I don't like the music. I think it lasts a little too long. I think that with yields going down, it's a new shift in the market. So if you look at the 10-year yield, let's look at the weekly chart. And sure, we'll have support at the trend line and all of that, but can we go further to the downside? With the PPI data that we got today, is it more likely or less likely for the Fed to cut rates? I think it is more likely. And of course, after the Fed cuts, then we're going to hit problems. But between now and the cut, we will see probably more downside to come in the 10-year yield, on the 30-year yield. So you want to be in those plays right now. The yield and dividend paying yields, the yield sensitive and dividend paying stocks, you want to be in these plays. You might say, but Maverick, hey, the XHB is way too high. I agree with you. Okay, I don't want you to buy the XHB right now if it got out of hand. You want to see a pullback before you buy. And you want to play some reversals in these guys. But what about Lowe's and Home Depot? These guys are still not overbought. Yesterday could have been bought. Any pullbacks here, they still have a lot of ground to be made. So you can still buy these guys. And you have a lot of names that went down. I mean, Deere, that's a good choice to be in. Deere still has a lot of ground to be made up here. So you have a lot of choices that you can get. And if you're scared about something that went way too high and you're chasing right now, I understand that there are others that fit the same category. Whether it's dash for trash, whether it is dividend, whether it is yield sensitive, whether it is dollar sensitive, they're still not really that bad looking on the daily or the weekly charts. They're still not overbought. You look at GLD. It came back today, just made up everything. So it's still not overbought. So that could be an opportunity here to accumulate a position in the GLD before it runs way too high and breaks out of this pattern. What I'm not sure about is the big caps. The big caps and the AI mania, I think today is an exception, but we hit earnings and going to slow down again and rotate out of. Folks will rotate out of them. So I don't want to be there. Okay, would love to do that, Maverick. John K., thank you so much. We'll do that. What about Okta? Okta, right now in the weekly chart, with 95. You're talking about the trade of the 100 calls, right? We've improved a little bit today. The problem with Okta, though, I mean, the thesis here was we have a bull flag. We finished the move in one shot to the 100 level. But now we have the 50 days moving average that we identified as the cut loss, and we've already cut it, right? We already got below the 50 days right here. Now we're above, So if you have it, you think it's going to go higher now. We see a little bit of a recovery in the IGV because the IGV sold before everybody, and now it's ready to go back and retrace some of these targets. So we have 1, 2, we have 3. If you think we go back to 3 in the IGV and we see buying of software right now, then you want to stick with it, but you want to average down because the contract, I believe, is down in value. So you want to average down. That means that you're assuming more risk on the trade. So before you do it, you have to assess, is it worth it? Or do I just take the value that I have right now and find an easier trade that I don't have to average down in and actually just enter fresh? I leave that judgment to you. But right now we're above the 50. We're seeing improvement. Let's look at Hack. We're seeing a little bit of improvement. So yesterday was a scary looking candle. Now we have a recovery candle here. Not quite above, but good enough because we're above the closing. Up to you. Maybe you think that the cybersecurity and software will begin to recover here and you want to stick with Okta, but you got to double down on it. We have another one here for CrowdStrike. That one is not showing a lot of movement today. And CrowdStrike has the highest weighting in Hack, along with Palo Alto. So if these guys go down and not move along with Okta, it could be another problem. So the trade has a lot of challenges is what I'm trying to convey to you here. Okay. I don't like the music. You're right. I barely have time to do anything. That's why we got Knox in the team, so we can look into this stuff. Anyways, the butterfly example, John, yeah, if you can send me one, especially a losing one, in details, when you enter it and what was the value, the close, all of that, I'll add it in my options tracker butterfly review because I'm going to start with the falling wedge. I think that video is overdue right now, but we keep adding to it. So I added TAN, now I'm adding Moderna. So we'll keep adding examples to it. Anyhow, hey Mav, could you look at RKLB? It's a small cap, looking very bullish, had golden cross, looking ready to take off, but also extremely overbought in the 1 hour. RKLB. By the way, did you get into the call options for Tesla? I think that might have fixed a little bit of the account problem, right? Let me know if you got into it. RKLB, breakout here. This is also sort of dash for trash, by the way. So this is the kind of name that will benefit from the environment that we have right now. And right now we're expanding the upper Bollinger Bands. A little overbought, but that's the daily chart. With weekly, we're not going to get anything because it is relatively new. But on the daily chart, I mean, you guys have to understand that it's the relative strength index. So it's showing strength, and here you have to sell covered calls if you have it. If you own the shares of RKLB, you would sell covered calls. That's the rational thing to do, but you don't assume that we have a reversal until we get a candle like this in a confirmation. Then you have a reversal pattern like here, that reverse hammer right here, or the engulfing candle right here. But right now, it looks to me that it has momentum, and it's not finished yet. The MACD can continue to move higher here, although a little extreme, but it can move higher. So I want to stick with this guy for a little longer until we get signs that this dash for trash period is over. But this is a benefactor of this kind of period that we're in right now. I would stick with it for a little longer. Unfortunately, did not get into Tesla. Yeah, well, good news is we'll have more. Okay, we'll have more breakouts and breakdowns that we'll get into. But I thought you got into that Tesla trade. But anyways, let's go back to the SPY here and see what's going on. The 5 minutes clean up. We're above the handle pattern, above the highs of yesterday. So look, the risk becomes to the upside. But at the end of the day, I think that we'll see a little bit of a pullback as the options market dynamics play out. I think what happened is we've seen also calls showing up in the SPY. Let's see here at what level and whether they're going to capture them and sell them today or not. So let's look at the daily here, buying. We want to look in the money because it's in the money now. So you see a lot of this buying showed up here at the 560, 562, and we got the 560 and 562. So again, they're pushing the tape via this buying here. And these are huge amounts. I mean, the 490, forget about that. That's in the money. But here, these are huge amounts for a daily expiration. Now let's go to the sell side, see if they're booking profits here. So look at the 60 and 63. The sell side, let's do the sell side here. Um, Selling the calls. There we go. We see 63 being booked, 60, but we're not seeing. Yeah, a lot of them being booked. Okay, let's see what's happening next week though. 7 days ahead for the 19th. What are we buying here? They're buying puts actually. The 560 at the 19th. 560 again for the 16th, but the 19th is more important. Here we see 562 being bought, 64, 60. In the money though, a lot of the 62s were bought, but they're going to close those. So the 12 is being closed. Look, I think that right now, looking at what I'm seeing right now, folks, at the buy side, out of the money, I'm seeing that they're buying more puts than calls for the expiration date of next week. So that could influence the tape a little down here at the end. And if we close within the body of yesterday's candle, then the odds would be that today was an options phenomenon, and then we're going to continue with that rotation next week. And earnings, of course, will have a bigger role to play. Speaking of, let's look at JPM. JPM made a recovery now, coming back. Daily chart, anything here? I think JPM will continue to go down, be honest with you. I think that it's going to be a bear flag. We continue to trace some here. What's really upsetting is the Wells Fargo. I mean, what is Goldman Sachs going to say to their clients? Because they said high confidence. Buy the in-the-money Wells Fargo calls before the earnings and for the expiration date of Friday. Okay, we did that, and now we're eating a big bag here. And that's from Goldman Sachs, not from me. If it was for me, then okay, you just listening to some guy. But this is Goldman Sachs, the professionals, and Wells Fargo actually shit the bed. So that's upsetting. Now let's look at the weekly chart, see if we can build on that and hit Wells Fargo even harder. Clean up all this crap right here. Do we have topping head and shoulder, folks, in Wells Fargo? Neckline. Let's give you a specific number for the neckline. Usually to be conservative, you want to take the lowest reaction, and right here we have 55.34. 55.34. I say if we close below today, we have plenty of downside, so I'll be actually a buyer of the 55.50 Wells Fargo puts. And maybe we'll ask Goldman Sachs for a refund for those calls. But anyways, we'll go here with the 26 with the 55. And we'll sell. Here it is. The 50. Let's see if we can capture some credit here. Not much. So if we go to August, can we get some credit? Not much. 55 is not that expensive, to be honest with you, because the implied volatility is still low. In this case, I'll just go 55 naked. Close to the money, $100, and we'll just take the 55 for August and play that. Good profitability, good risk versus reward. So I'll stick with the 55, but we need to see a closing below 55.34. They'll take an in the money put. And we could actually be going down to form a larger head and shoulder, but one step at a time. The point being is Wells Fargo is breaking down here, and I would say about time. Citi is the one that supposedly was the best earnings today, but again, you see this look of stalling and possibility of a head and shoulder, but too early to say on this guy. So Wells Fargo is the weakest link. Bank of America comes later, of course, did not report today. It comes later. Let's see what comes Tuesday. Bank of America, I think that it just ran way too high, to be honest with you. So I think we see a retracement, maybe the trend line here, but Wells Fargo is the one we're going to begin working with. I think JPM too. JPM I don't think will continue to go positive. I think that the momentum here will reverse, and we'll see JPM going down below 200. So I'm thinking about these two, Wells Fargo and JPM. Let's go with the 200 here. For August, 187. So in JPM, we can actually sell the spread. The 190, and we'll spend about 140 to make 850. That's a good risk versus reward. I don't think we'll go to 190, to be honest with you. But if we go to 200, the trade will be up 100%. So I will think about JP Morgan and Wells Fargo for now. Okay, let's see what you guys got. Really, where are you guys? Everybody's gone. Look at the queues running out of steam. We can look at the flows of the Qs if you'd like. And again, I would I would have said, folks, risk is to the upside now. If the recovery today was led by the Qs, if the Qs was doing a trade above the bearish engulfing, I would have said, okay, it was one day wonder yesterday, forget about it. But because the Qs is the laggard, it's kind of keeping that in mind, that be careful. We could see more weakness in the Qs comes next week, and it pushes the SPX/SPY down with it. The SPY, of course, benefiting because you have a lot of other names working out. Industrials, dividend paying, the dash for trash, the miners, even energy is okay in certain corners today. The healthcare is pretty good, honestly, to be honest with you. Healthcare is the sector that you want to be in, along with the dividend paying right now. But notice that healthcare works either way, folks. Healthcare been working when the mania was going on, when the rotation was going on, when rate cuts are going to happen or not happen. Healthcare just works. Doesn't matter. So we'll look at opportunities and pullbacks here to accumulate positions. Look at this guy, by the way. I have this in my portfolio as an example. RMD. They keep hitting this guy for stupid reasons that, oh, Eli Lilly did this and that. But it keeps coming back. And every time it drops, I buy more. So we bought more here. We got back up. We bought more here. We're back up. So healthcare, plenty of opportunities here for you guys to consider. Okay, the Qs. Let's go back to the Qs here, and I will look at the flows to see what they're buying for next week. The Qs running out of steam a little bit here. Let's look at the flows really quickly, because the SPY is also, they're closing the calls that they bought today, and they're switching into puts. So that's interesting. But the Qs, let's go for today. See what was bought. Here, look at this. They bought 496.99, so they pushed the tape higher via all of this buying, and the sell side came from the puts. You guys seeing this? So when folks sell their puts or their calls, excuse me, when they sell their calls, they sold the calls and they bought here higher calls out of the money. 496, 498, 499. So that kind of influences the tape and the market maker to push us higher. But now, are we going to begin to see buys of puts that see the expiration date of next week? We're seeing some puts being bought, but we want to see out of the money, because that's the important. Oh, wow. Okay, we're seeing some showing up here, folks. We have 192. That's too far. Diagonal. No, not too far. Diagonal put spread. This is interesting. 495, and they sold 465. I think we've seen a similar one yesterday. 498 showing up in the house. 93, 95. So, yeah. They're going to influence the tape here and push the Qs down if they continue to do this. And then let's look at the sell side for next week. Are we selling some calls? We're selling a lot of calls. So, yeah, look, I think a lot of people will get sucked into the big caps are going to recover now, and then they get hit next week. So be careful with that. I would say buy the dividend-paying names. Buy some of the dash for trash if they pull back. Absolutely embarrassing for Goldman Sachs. I got the article. I got the email, by the way, from Goldman Sachs. I got the email to buy the Wells Fargo trade. So, yeah, I don't know why. To be honest with you, I don't know why they said. They gave us a little bit of the thesis, and I built onto it that maybe it's because the commercial real estate losses will be alleviated, at least the concerns about them. But yeah, I don't know what do you say to your clients if you tell them with high degree of confidence, because that was the quote in the email. It's high degree of confidence kind of trade. But anyways, it happens. It's the options market, folks. What are you going to do? Hey, Maverick, could you please go over the Nike trade? I'm still in. You're up about 67%. Nike, it is working out. You're up 67% right now. We have the expiration date of next week. Let's go back here, and I want to show you something. So we got, let's go with the trade that we have. We have the calls, the 73 line in the money already, and then we have the 75 that we sold. Got about $94 on it right now. Look at the contract value. What happens Monday if Nike drops down by 1%? Well, let's expand here a little more so it can be realistic. Let's say if it drops half a percentage point or so Monday, we'll be down to 72. Would that be upsetting? Maybe, but not much. If we go down 1%, now we're back close to even. So the question now becomes, if we have the profit right here, do we think that Monday will be up or down? The chart says, yeah, we could continue to go higher. But because of the expiration date being too soon, any movement Monday, especially the downside, could decay the gains that we have right now. So the rational thing to do is, if you still like it and you think that Nike will go higher, then we close this trade, we book the profits, and we up to the 75 target. So we go to 75 and we sell something above, let's say 78, but now we're going to go to the 26 expiration. And we're booking 94 or 95 or 90 cents, depending on what you can book out of it. And you're spending a portion of that to enter a new trade. If you go to the second, you can do that, and it's still going to be a portion of what you have as profits right now. So that's the rational thing to do, is to close, because we have a shorter expiration date coming, and any move that come out to the counter or undesirable direction will lose a lot of these gains. If we had it for August, I would say, yeah, you keep it. The chart looks fine. Okay, Kramer likes Wells Fargo. I don't know if the chart breaks the level that I gave you guys. I think that I'll be buyer of puts because they're cheap. I mean, you're spending $100 for in the money, close to the money put. I think that's a bargain. Anyways, thank you so much. Appreciate the hard work. Any idea why Nat Gas is performing poorly recently? So if we look at the Henry, I think we're up today. Could be mistaken, but I think we're up today. Yeah, we found some support here before the target. Natural gas, the weather in Europe has been colder than usual. Ask any European viewer here, at least in the UK. I know in the UK it's been way colder than average. So there is no need for natural gas right now. And this guy's the exporter. We export from the Henry Hub to Europe and Asia. And the heat wave has been here domestically. So if you look at the commodities for California, for example, those prices are skyrocketing right now. But if you look at the Henry Hub in Louisiana, not doing so much because demand is still slow in Europe. Maybe the heat wave will increase as we get to August and September across the Atlantic. We'll see. But right now, nat gas, if it finds a footing here, begins to move higher, let's say Monday, Tuesday, I would say, okay, we found a bottom and we're going to retrace the 20 days moving average, and then we'll see what happens after that. But it's weather-related kind of trade. Okay, apologies, my stream was glitching. Not sure if you covered the CMG question. CMG, I don't see CMG here. But we'll look at it again. Maybe you posted it and didn't show up here, but look at CMG, see what we see here. CMG, it's a bear flaggish looking chart right now, expanded the Bollinger Bands. Looks to me as it wants to drop a little more before the report comes out. Now, would Chipotle benefit from the period of cutting rates? I think it was a benefactor when rates were going higher because of their cash positioning and pricing power and all of that. So it's the kind of name that they're rotating out of. But it also helps to see the flows. So if we look at the flows, let's see what they're buying. CMG, and we see the buy side and the money. We have the 58 calls, but that's 25, so that's not relevant. Any buys here? We have the 62.7, excuse me. 62.7 puts for July 12. So 62.7, that's in the money. The assumption is, if we open this trade right here, they're looking for below 57.15 in expiration. So if we look at the trade, yeah, they'll be profitable if we close below the 57 line. So that's what they were looking at. We're at 57.61 right now. So another drop and they'll be probably close this trade. Let's look at the sell side. Selling the 64 puts, that's bullish, but it doesn't really help us out. That's already in the money. Selling the 55 calls, that's somebody booking profits. So nothing here in the flows, folks, that can really give me a clear picture of what they're buying and selling. So right now, I would go with the technical setup alone, which is right now off a bear flag, which could open the path for more downside here in CMG. Got a little pop out of it here, but no follow-up. We got an oversold pop, but no follow-up right now. And because of the rotation, I would say it'll be a victim of outflows, not inflows, because it's been a performer big time during this period here. Okay. Anything else, folks? Do we see anything else here? The VIX. Let's look at the VIX here, see what's going on. Are we seeing finally some demand for puts showing up? Yep, a little bit here beginning to show up. So the assumption is we see a little bit of weakness showing up in the SPY, but we want to see if you want to see a continuation of a sell-off or a rotation comes Monday, say that we need to close within the body of the trading range of yesterday. And of course, the Qs to me is more important to watch because if the Qs weakens, I think that's going to be my leading indicator that next week the SPY will continue to be pulled down. The IWM really quickly here before we go, stalling, options expiration, but I would go in the camp of we pulled back a little bit Monday, so up to you if you want to buy the puts or not, but don't go too crazy, like 200 or 205, just play a pullback maybe closer to the gap, and then I think it will consolidate before finding the energy to move higher. So it's a pullback trade. I would go 210 max on the IWM. Apple really quickly here. Look at the hourly chart. Nothing that I'm seeing here in terms of reversal or closing above, so we'll just leave it alone, although it did influence the tape a lot today. NVIDIA, anything going on here? Retracement to 132, but any fixing here in the daily chart? Not quite. Look at the MACD indicator, not quite. We're not going to discount the fact that it could find some footing and move higher, but right now, it's not giving us that confirmation. So the risk for the downside is still here. The risk for a lower high is still here. Anyhow, hourly chart, can we do something such as resistance and then come back Monday and drop more? That's also a reasonable assumption. So for now, NVIDIA, inconclusive. It didn't give us a signal for bullishness, didn't give a signal that we're going to go down further because we're still holding 127.16. Meta, really quickly, because Meta was an interesting one to watch today. Not closing below that line, so Zanskar, if you have the trade, I'm going to say keep it just in case you need some bullish exposure for Monday. I think that Meta will give you that exposure. But again, double top, just waiting for the break off the neckline right here. Okay, let's do FXI, Pinduoduo, and Baba. More juice near term or pullback? Also, China EV market is a wreck with the price war. How is Tesla impacted? Look, Tesla right now doesn't really care. Tesla's trading via mechanics. There is a stampede in buying call options, and there are also some short covering showing up. At least it did here at the 240 and above. There was a little bit of short covering showing up. But I think it's an options phenomenon, so Tesla's going to depend on this earnings report right here. Of course, before the report comes out, they're going to buy insane calls out of the money at the 300 and 350. So if there's a pleasant surprise here, you could see a huge move to the upside. If there is not, though, there's a disappointment, you'll see a big flush down. You could erase the entirety of this rally. So Tesla will be interesting here. Earnings, I don't think it's related to China right now. What's really being impacted from China is NIO. Even though with the Chinese names, with the dollar going down, you see NIO beginning to trade higher here. Li Auto finding a little bit of footing. So again, there's a price war, I'm with you, in China and EV. But a lot of these names are already down big. And as the dollar continues to go down, and by the way, there are tariffs on NIO in Europe now. So NIO says we're going to increase the pricing to make up for the tariffs. That could actually be a positive catalyst for NIO. Because if the customers say, okay, I'll pay the price, because even with the tariff and the increase in the price, a NIO vehicle is still cheaper than a European vehicle. So NIO could benefit from that. Now we look at the FXI. I think that we're still having bullish momentum in the weekly chart. We're just beginning a breakout here, so I want to stick with FXI or KWEB. Doesn't matter which one you like. It's the same thing, really. KWEB, although has a lower beta. So whatever cheaper options you can find, you go with them. Now, BABA, are we way too high, too far? I think yes. I think BABA went above the top of the Bollinger Bands. So BABA will do another pullback and then continue to move higher again. So if you have the trade, I closed it. My mistake, of course, but I had to do it before the CPI. I didn't know where we're going to go with it. But if you kept some of the BABA trade, you're probably in big profits right now. I would close it, wait for a pullback, then re-enter again. Pinduoduo. Pinduoduo is the same thing but I think it's not overbought as BABA, so you probably see more upside to the upper Bollinger Bands. You might want to do a retracement though to the 20 and then come back up. The one that I do like, at least a few days ago, was JD. It was kind of oversold relative to BABA and the rest, so maybe you want to look into JD also as a play for China. Okay, agreed. Appreciate. Thank you so much, John. Doubted. McDonald's 260, 270 for next week. Hold and hope. You have earnings coming out. Let's see if that's next week, though. I don't think it's next week. I think it's, the 29th, 2 weeks from now. You have the 260, 270. It's a little too far. It's a long shot. I'm just going to be honest with you. It's a long shot because you have a lot of resistance in the upper Bollinger Bands, a lot of resistance here. But who knows? Maybe because of the love for dividend stocks, again, you might see flows into McDonald's showing up. So let's see what value you have on it. If there's value, then you probably want to reconsider. MCD, July 19th, you got the 260. That's the leg that you got, most important one. You got $120 on those. So that's pretty good amount. Okay, so it's not 30 cents or 20 cents that we can ignore. Now, the 270, that one is decayed in value a lot. So one thing you can do to de-risk is sell the 265 instead. And now you're limiting your profits, but at least you're knocking down your entry cost. You can also do it in the butterfly manner. So you can do this. You can do the long call butterfly. You still got the 260. But now we want to sell the 265 because we're running out of time, and then we buy, or we already have the 270, so we're just going to sell two of this 265. And that way you net a credit of about 35 by 2, so you get a credit of about 70 cents. And that will knock down the risk that you have for the 260. So that's one option. If you still like it, I think that maybe restructuring it is a good move at this point. By selling the 265, and of course you have to buy the 270. You have to buy it twice because you sold it, so you have to buy it and then buy another one as a hedge, but it ain't going to cost you a lot. Or just book profits or book whatever you got. It's not profit. I know it's not. Sorry. Making you feel bad now. It's not profits. And then if you still like it, you want to roll to a longer expiration date. The 26 will have a little more of higher implied volatility because of earnings coming out. Nope. Doesn't show here. Oh, right here, 29th. So if you want to have the higher implied volatility protection, then you go with the August 2nd, but it'll cost a lot. So these are the considerations I would do. Either roll to a longer expiration date or change to a butterfly structure if you like. Or, honestly, if it's my trade, I would just book the value that I got, which is $100. That's quite a bit of money here. I'll book that and find another trade that I can play with. Okay, can you look at WBTN? Recently IPO'd. WBTN. Webtoon. Webtoon, we can't look at the daily chart because this guy's it barely traded here. So we have to look at the hourly, see what's going on. You can't really chart it, to be honest with you, but since it is a new IPO, it should be a benefit. I mean, software, yeah, it should benefit from the period that we're in right now. No earnings per share, so no profitability, $2.5 billion in capitalization. Yeah, I think that, you could buy this guy here, and it could benefit in this period that we're in, because a lot of these names will be Reddit. If you don't want to gamble a lot with this guy, if it's not clear to you, go with Reddit. I mean, Reddit is breaking out right now, and it will benefit from this environment. Above the highs, at least, bull flag, breakout. So go with Reddit. I think I saw some call options buying here in Reddit. RDDT. Look at this. They're buying the 100 calls for August. Let's see out of the money, though. Oh, they sold the calls. That's it. That's a sell. But what about the buy? The 100 calls, they sell it, though. So they bought it August 16th for almost 100 grand. They sold it at a loss. Okay, they abandoned that position. So we know that this guy is no longer with us. The 100 calls. But the 80 for 26, that's too far. How about the 74 for July 19th? That's the most important one. So 74 already in the money. Let's see if they closed that guy here. 74, not seeing it. They didn't close the 74 call. So that's still going on. Yeah, they might roll to the 75 or above. So look at Reddit. It could be one that you want to buy some calls on here. Let's do calls. RDDT. We don't want to go too far because it is a wild shot. You have the 80 if you want to go adventurous, but the premiums are way too high because the implied volatility are high. Let's do something here for next week. If we do 75 or 76, we sell the 80. We'll spend about $100 to make 250. So the risk versus reward, unfortunately, with the implied volatility, higher implied volatility, it kind of limits you. Either you go with the naked and be adventurous, or you got to do these spreads and accept a smaller profit, which you can make in another trade, an easier trade, in a boring name. So the risk versus reward here, not pretty good. Let's go with the 80 and sell the 85. In this case, we'll spend 95 to make 400. Okay, that's better. But we need a break even of about 7%. So we need the stock to be at the 82 level. But again, with the momentum that we have in Reddit right now, clean up the chart right here, I think there could be a possibility that it squeezes into the 80 territory next week. Risk, but if you want to do risk, I would look into Reddit here. Okay, are you able to look at Eric by any chance? Ericsson. What are we looking at in Ericsson here? Like, do you want to get in? Do you want to sell? Do you want to short? What do you want to do? Because right now I would say that Ericsson is probably showing a positive pattern, at least in the weekly, with the inverse in his shoulder. It's above the neckline. So I think that if you're a shareholder, if you want to go in an investor side, you want to buy the name, you don't want to short it. As a trader, I mean, it's overbought, but not really that overbought. So I would not be a trader in this guy. I'd be a buyer as an investor because it's already crashed. It's offering value right now. Can we look at LMT, RTX? Oh, you owned Ericsson? Yeah, keep it. If you have it at 5, keep it. It's working out finally. Keep it. When I look at LMT and RTX, LMT, nothing is going on in LMT here. We have earnings coming out soon, so that's going to be the deciding factor. RTX, it's the same thing. A little weaker, though. RTX is a little weaker here. But we have to look at these earnings because we're with Ukraine and the package that they announced yesterday. It might be good for these companies. Now, Geo. Geo, this is a REIT, the present thing, right? Geo at the previous top. So I think maybe Geo finished the move. And you're due for a pullback, and then we'll see what happens. Whether it forms a topping in his shoulder and comes back down, breaking the neckline and coming down, or... But right now, I think that if you've been long Geo, that I think that you're done here because you reached the previous top. You'll find some resistance, so I don't want to be long right here. BSX looks interesting. And it's been a high momentum name for a while. Up to you. I think it's been consolidating, and we'll see an energy release. Maybe you look at it as went way too high, too far, but maybe there are reasons why it did that. And if it wanted to go down, they had plenty of opportunity to do so. It didn't. So maybe it's gathering energy right here to be released. And it's been released higher. If you look at the energy contraction at this level right here, we may be finally getting out of the bearish momentum and moving higher. So yeah, but I showed you a lot of other opportunities in healthcare too. Some of you will talk about the insurer names. Let's look at UNH. Never really broke the support, now breaking above the neckline. So that's your neckline in the shoulder line. held 3 times. Now we're above, so UNH could also be another play for retracing the prior resistance here. Clean up the chart. Resistance right here. So we could be heading to find this resistance right here. I think that the healthcare looking pretty good right now. Okay, what are your thoughts on European indices? Look, the DAX will trade as the Dow Jones. I mean, that's how it trades. The Dow Jones is higher today, so the DAX is higher. That's how it's going to trade. Now, if you want to look at European indices, otherwise, besides the German ETF, if we look at EZU, for example, or the IEUR, this is the mechanism where we can trade European equities here. So if we look at core Europe, the problem with this one is the DAX. If the Dow Jones continues to outperform because of this rotation, so this is your Dow Jones right here, catching a bit today and making higher highs, so that could be pushing the DAX higher. But the other European equities not really performing pretty good. So you got the risk of maybe we stalled here at a head and shoulder in European equities. So I would stick with the DAX with German equities because that's tracking the U.S. equities. But French stocks and in the FTSE, I'm not seeing enough strength there to follow. And of course, in the case of UK, that's already all-time highs. So I would stick with the DAX. I think with the rotation that we have in the Dow Jones right now, it will benefit the industrial names. With the lower dollar, that's going to be also good for the industrial exporters, Germany to China. So I'm just going to keep it at the DAX for now. And of course, you can trade that. If you look at the U.S. market, you can look at the VGK. That's also the most popular one, but it will show the same look as the one that I just showed you. So if you want to go with the German equities, you're probably going to go with the ticker here, EWG. And that's going to track the DAX for you. And right now, still struggling with the shoulder line, but I think it'll make it because the Dow Jones did. The one I'd be worried about is the EWJ, Japan. Because yesterday there was a rumor that maybe the Bank of Japan interfered, and if the yen continues to rally here because of an intervention or because of the dollar going down, we could see a top in the EWJ and it moves down. So I'm eyeing it. It's on my list. Not seeing an entry right now, but maybe pretty soon we'll see a short entry here. Do you think insurance names will perform? We have FIHL is the one that I have or been tracking. FIHL. Fields Insurance Limited. Oops. I mean, insurance been hot. This is a newer play, though. So you're kind of in the IPO territory. You're kind of in the dash for trash territory because I believe this company doesn't have, let's see, the market cap, 2 billion. Yeah, it's a small cap. It pays dividend, though. It's a really nice dividend here. Yeah, I'll keep it because we have dash for trash right now. But for long-term holding, you want to be with Progressive. Let's see if Progressive here, PGR. Progressive is the one that every time you think it goes down, it just keeps holding. It's the kind of the Costco of the insurance companies. So right now, energy consolidation and higher we go. I think that's going to be the next move unless earnings shows a disaster. So you want to wait till that report comes out. It's already out. I mean, it says it's out, but I don't think it's out. I didn't see it in my radar. So I think they have the wrong date here. But look at the earnings report. I think that we're going to have, let's look at PGR here. Progressive earnings. I'm looking at the company's website right now, so we get it accurately. Yeah, that's going to be released on the 16th. So they got it wrong right here in TradingView. 16th of July, we'll have the report coming out from Progressive. Want to wait for that? If it's good, you got to buy some shares here. Other insurance names like MetLife will pay a good dividend, and they've been holding so far right now. The problem with these names, they benefit from higher interest rates. in the case of MetLife and the life insurance names. So I'd be careful with those. I think that Progressive could be a good choice for long-term holding. And the name that feels good for now, but it's a trade. So you're going to own it for a little bit, then sell it at some point. Do we think that the Qs can close below 498 today? Let's go back to the Qs. We need to see flows, though. Today, it's all about options flows. So we need to see somebody buying something here to influence the tape. And if we look at the Qs, the expiration date of today, let's see what they're buying as we speak right now. Let's look at the buy side. 499 calls being bought for today. 496. They got the 507 puts, but that's deep in the money, so they're probably looking for a tiny little bit of a drop to make their VIG. I'm not seeing the 498 here. 498 put showing up, but it's alone versus the calls. Now we want to look at the sell. Are they closing the calls? Yeah, the 499, 94, 96 being closed, but the 98 calls not being closed. We need to see the 98 here. There's one right here, but we need to see more 98 being closed, and that will influence the tape in favor of a closing below 498. To be honest with you, it doesn't really matter whether we close 98 or 99, but if you have options, of course it matters. For me, are we going to close within the body of the bearish engulfing or not? If we close within the body, then the odds would say the next week the Qs weakens and it pulls everything down with it again. Okay, folks. Thank you, Kevin. I love you back. But we have 3 minutes before we have to go back to Discord and chat with the other folks that we have there. So let's just wrap it up right here. But thank you for joining us. This was a really comprehensive session. So we'll have highlights from this session for you because we talked about a lot of things, and I want to have the highlights ready for you for if you want to review it in a separate video. In BTI for several years. Let's take this one before we wrap it up. BTI, British American Tobacco. Look, same thing with PM. If you have it, keep it, because they're going to begin to benefit at this point, to move higher. And you got a dividend of about 9%. Keep it. This is exactly the time we're going to hold this kind of stock. Okay, thank you, folks. Here we go. We have somebody from Kuwait. Thank you so much for joining. That's amazing. But we're going to be in Discord here in about a few minutes or so. 5-10 minutes we'll be in Discord. If something happens in the market, we'll be here to cover it. But anyhow, thank you for joining, folks. And we'll talk to you again soon. Good luck with the rest of the day.